So one Canadian city is officially in a buyer's market. And no, it is not Toronto. Even with near record low sales, they saw average price go up in Toronto. This doesn't make any sense at all. Let's figure out what's going on. Hey there, and welcome back to the monthly Canadian real estate market update here on Bald Prairie Real Estate for the month of October, looking at September stats. My name is Matthew Pfeifer, real estate agent in Regina, Saskatchewan. That's my trusted assistant, 𝗤𝗲𝗲𝗶𝗳𝗲𝗄. We're shooting this at like 10 o'clock at night. She's absolutely exhausted with a crazy busy day. But we got to get you guys up to speed on what's going on because Toronto saw nearly a record low sales and yet average price went up. This makes no sense at all. And no, it's not Toronto, it's a buyer's market. Let's deep dive into these stats here. If you want to jump to any one of these markets I cover here, I'll put them in the timestamps below. You can just jump directly to whichever city you'd like, but then you'd miss this terrible joke that I have. And we're going to do a Halloween themed joke here. What's the problem with twin witches? You never know which witch is which. If you have a terrible joke that I can use in a future episode, put in the comments below. Let's get into the monthly update. In Victoria, that almost 500 homes sold in a month, but that's down 26% from their 5-year average, which is a little over 660, and that gap continues to accelerate. While the 1,250 homes that were put up for sale is up 8% over that 5-year average of 1,150. And the 2,700 homes for sale right now, that is up 27% from the 5-year average. Usually about 2,100 homes are for sale this time of year. That means months of inventory in Victoria is 5.5. Almost a buyer's market, but no, it's not Victoria that is the buyer's market right now. So when it comes to home prices in Victoria, the Canadian Real Estate Association's composite benchmark price, which combines all property types into one number, and it's less volatile than average price, is $891,000. That is equal to what it was last year, down about 9% from the peak we saw of $975,000 in the spring of last year. Now, when you read the press release put out by the Victoria Real Estate Board, they're going to say, and now this is 2 months in a row, they've said, well, it's a seasonal slowdown. I disagree. And so do the numbers. Sales are down 25%. That's more than just seasonal. In fact, when I went back through the last decade's worth of sales for the month of September, that was the worst month of sales in the last decade. So sorry, Victoria Real Estate Board, I disagree with you. And Victoria is one of the most expensive real estate markets in Canada. So it is absolutely more sensitive to higher interest rates than other markets are in Canada. You're seeing this in Vancouver, you're seeing it in Toronto. Those are the markets that are being the most significantly impacted by higher interest rates. So no, this is not seasonal. There's more at play here, and that is most specifically higher interest rates. What has been interesting though is what's going on in different types of products. Single family homes, those are seeing prices decline, whereas condos are actually seeing prices tick up just a little bit. And that is due mainly to the affordability of condos versus single family homes. In Vancouver, there was 1,900 homes sold in the month. That is down 24% from the 5-year average, where typically over 2,500 homes sell in the month. That is a really staggering drop versus the 5-year average. While the 5,400 homes put up for sale in the month is up 5% versus the 5-year average, where usually about 5,200 homes are put up for sale, and it reverses a trend that we've been seeing in Vancouver where the number of new listings had actually been dropping. But when it comes to active inventory in Vancouver, the 11,300 homes is exactly equal to the 5-year average, and months of inventory is at 5.9. Not quite a buyer's market yet. So if you guessed Vancouver was going to be the buyer's market, no, technically they're not quite there yet. When it comes to home prices in Vancouver, though, the Canadian Real Estate Association's composite benchmark price, which combines all property types into one number, and it's less volatile than looking at average prices, $1.2 million. That is up 4% year over year, but it is down 5% from the peak we saw last year of about $1.26 million, and now 2 months in a row that price has dropped month over month. And when I've been chatting with real estate agents in Vancouver, I'm asking what's going on there right now. And the most obvious answer has been, well, investors have definitely put the brakes on things, not surprising at all. And we've also seen a lot of end users also sitting on the sideline, a lot of uncertainty, obviously with interest rates. Now we've seen 2 pauses in a row. We'll see if that continues or not, and if that puts a little stability in the market, but also just higher interest rates in general and a fear of prices declining has put a lot of people on the sideline. So then I asked, well, who's buying houses in Vancouver right now? There's still almost 2,000 sales in the month. And of course, it's people that either have to buy or they're seeing an opportunity to make a purchase that makes sense. And this is going to sound really real estate cliche, but it holds true. In any market, there's always an opportunity to find a good deal, the right deal. Just like in any market, there's always the opportunity to find a bad deal that's the wrong deal to make. So you always need to know what's going on in your local market. And what exemplifies that more than anything else is looking at West Vancouver as an example, where single family homes are seeing price increases while townhouses are seeing price decreases. Same month, same neighborhood, and two different directions. In Calgary, they had 2,400 homes sold a month, and that is once again way more sales than we saw in Vancouver. I should actually add up how many months this year we've seen more home sales in Calgary than we have in Vancouver. That's up 45% over their 5-year average, which is usually less than 1,700 homes sold in a month. While the almost 3,200 homes that were put up for sale in a month is up 14% from their 5-year average. Usually about 2,800 homes are put up for sale in the month. And when it comes to active inventory, there's about 3,400 homes for sale right now in Calgary. That is down a staggering 43% from that 5-year average, where typically about 6,000 homes would be for sale right now. So months of inventory is 1.4. That is by far the tightest inventory situation in Canada. When it comes to home prices in Calgary, the Canadian Real Estate Association's composite benchmark price that combines all property types into one number, and it's less volatile than average price, is $570,000. That's up 8% year over year. But I mentioned last month there might be a drop when we see the month over month stats, and that's exactly what we saw, a very small drop from August to September. You guys are probably sick of me saying that Calgary continues to be Canada's hottest real estate market, so I promise I'm only going to say it one more time in this video. Calgary continues to be Canada's hottest real estate market. Okay, I feel better now. When I'm talking to real estate agents in Calgary, one of them had just attended a local economic forum, and they took a bunch of really good notes, so I'm gonna read them off here real quick. Calgary is forecast to be the economic leader in Canada over the next 3 years. And 2 years ago, we started seeing what they called in this forum, economic refugees. Okay, interesting term, but essentially what it is predominantly people from Toronto and Vancouver looking for a more affordable lifestyle, and they're finding that in Calgary. There's also a lot of investors from those two same cities that cannot find properties that make sense for them to purchase in those cities, but in Calgary, they can find that. And those are the three biggest factors that are driving the Calgary real estate market right now. As well, over the last few years, we've seen a number of developers buy up significant land around Calgary with the intention to develop that. Now, it's going to be probably 10 plus years before this goes from planning phase all the way through to where people are actually living in these communities. So don't hedge your bets on saying a lot of inventory coming up real quickly, but it is coming. Now, when you see strong economic growth, a lot of people moving to the center, well, that's generally a recipe for seeing home prices go up. No, I'm not saying the home prices in Calgary are going to continue to go up forever or in a straight line. There will be ups and downs along the way, but if you continue to see those things combined together, that's going to put a lot of upward pressure on prices. In Edmonton, the 2,050 homes sold in the month is up 28% from their 5-year average of 1,600. And the 3,100 homes put up for sale in the month, that's up 7% from their 5-year average, which is a little under 3,000. When it comes to active inventory, there's about 6,600 homes currently for sale in Edmonton. That's down 14% from their 5-year average, where typically you're going to see about 7,600 homes for sale this time of year. And that means months of inventory in Edmonton, 3.2, just on that edge between a seller's and a balanced market. When it comes to home prices, Edmonton, the Canadian Real Estate Association's composite benchmark price, that combines all property types into one number. It's less volatile than average price. It's $380,000 approximately right now in Edmonton. That's down 6% year over year, which is down 6% from the peak of about $410,000 we saw last year. Basically, prices stayed flat all through the summer, and they start to cool off a little bit in the fall. And we saw a month over month drop in Edmonton, although very, very small. Last month, I talked about the seasonality in the Edmonton real estate market, and that's true basically across the prairies, where as the weather cools off, so does the real estate market. And we definitely saw a little bit of that in the Edmonton real estate market. Now, they had a pretty good September weather-wise, but as we've got into October, especially the back part of October, we've seen the snowfall and the weather cool off, and I expect when we see the October numbers, you're going to see a drop off in sales. But even though sales are not quite as crazy busy, it's still well above average for this time of year, and new listings really haven't kept pace with the amount of sales, and that's why you haven't seen much change in inventory. Interestingly, days on market, so how long it's taken properties to sell on average, dropped a little bit. It's now about 44 days on market. In Regina, they had over 300 homes sold in a month. That's up 12% from the 5-year average. Usually about 270 homes will sell in a month. And when it comes to the number of homes that were put up for sale in a month, it's 442. That's just slightly above the 5-year average of 439, but it does mark the first time all year that we've actually seen that above the 5-year average in Regina. And currently there's just under 900 homes for sale in Regina, which is down 31% from the 5-year average. Usually about 1,300 homes would be for sale this time of year, and it's actually less homes for sale than there was this time last year. Months of inventory in Regina is 2.9. When it comes to home prices in Regina, the Canadian Real Estate Association's composite benchmark price, that combines all property types into one number. It's less volatile than average price, that's why I like to use it. Just over $308,000 in Regina, down 3% year over year. It is down 8% from the peak we saw last year, about $335,000, and a very slight drop month over month. After a pretty busy August, things slowed down a little bit in September, but still above average. And yes, we are still seeing multiple offers in Regina. It's just not as crazy busy as it was early in the spring or even last year. We would see 5 or 6 offers on those really well-priced houses that showed well. We're still seeing some of that, but now it's 2 or 3 offers, and instead of going for a significant amount over asking, which is crazy for Regina, now we're seeing houses sell about asking or sometimes slightly a little bit more. And that is especially true in homes priced in that mid $300,000 to $400,000 price point. That's where we're seeing the most competitiveness. I've had a lot of buyers been in multiple offers in that, and a lot of them have been losing out to places that have been selling $10,000 or $15,000 over asking. In Saskatoon, there were 374 homes sold in the month. That's up 8% from their 5-year average. We're typically about 350 homes sell in a month, while the 575 homes that were newly listed for sale is down 16% from that 5-year average. We're closer to 700 homes are typically listed for sale in a month. And the 970 homes for sale right now in Saskatoon is actually less than Regina, which of course is a smaller city, down 43% from the 5-year average. Usually closer to 1,500 homes are for sale this time of year in Saskatoon. And so months of inventory in Saskatoon is at 2.6, still in a seller's market. When it comes to home prices in Saskatoon, the Canadian Real Estate Association's composite benchmark price, which is less volatile than average price, that's why I like to use it, and it combines everything into one number. It's simple and easy, $381,000. That is up 3% year over year, and after the previous month we saw a slight drop, prices rebounded again in Saskatoon month over month. Much like Regina, after a busy August, things slowed down a little bit in September, but again, still well above what we'd expect. The number of homes new listed for sale has continued to decline versus that 5-year average. So we're seeing fewer homes newly listed for sale than we would typically see. And that's why inventory is down 40% versus the 5-year average. In fact, there's nearly 20% fewer homes for sale today in Saskatoon than there was a year ago, which is crazy to me, thinking how busy and how low inventory the market was last year in Saskatoon. And when it comes to the busiest neighborhoods, well, a lot of these are going to be something you've heard before. Brighton, Evergreen, Hampton Village, Rosewood, Stonebridge, Wildwood, and Willow Grove. In Winnipeg, they had almost 1,200 homes sold in a month. That is down 14% versus the 5-year average of about 1,360 homes, while the 2,050 homes new list for sale is down 6% versus their 5-year average, which is about 2,200. And the 4,100 homes currently for sale right now in Winnipeg is up 8% versus their 5-year average, where typically it's closer to 3,900 homes for sale. So months of inventory in Winnipeg is at 3.6, just trending back into that balanced market territory. When it comes to home prices in Winnipeg, the Canadian Real Estate Association's composite benchmark price, which is less volatile than average price, combines everything in one metric. That's why I like to use it. $344,000. That's exactly equal year over year. It is down 6% from the peak of $370,000 we saw a year ago, and we saw a slight month-over-month drop in prices. When I'm talking with real estate agents in Winnipeg, they're telling me 2 things they're playing into their market. First, of course, is seasonality. Weather's cooling off, so does the market. The second has been the election. Anytime there's an election, it tends to have a slow or cool down effect on the real estate market. But when it comes to inventory, this is actually the most inventory we've seen in Winnipeg since 2020. So that's good news for buyers. There's more to choose from, and that is partly what's been pushing down prices. But houses that are priced in that mid 300s that show well, those continue to sell really well, and we are still seeing some multiple offers on those houses. In Toronto, the 4,600 homes that sold in a month is not only down 41% from the 5-year average, we're typically about 7,800 homes sold in a month. It's the worst September in 20 years. And the 16,300 homes newly listed for sale is up 6% versus the 5-year average of 15,300. But I was actually expecting it to be more. Everybody was talking the previous month about this huge surge of new listings that was coming on the market, and it didn't quite materialize. We'll be talking more about this in just a minute here. And when it comes to homes for sale, so active inventory, 18,900, that is up 31% from that 5-year average, where typically less than 15,000 homes are for sale this time of year. That means months of inventory is 4.1, pushing Toronto right into the middle of a balanced market territory. And I started tracking Toronto stats back in 2015. This is the first time I have recorded Toronto being in a balanced market. When it comes to home prices in Toronto, the Canadian Real Estate Association's composite benchmark price, which combines all property types into one number. It's simple and easy to use. It's also less volatile than the swings you see in average price. That's why I like to use it. It is $1.127 million, up 2% year over year, down 16% from the peak of 1.33 million we saw in the spring of 2022, and a month over month decline again. Okay, so I said I would talk about what's going on with new listings. There was supposedly this surge of new listings coming to market, and as I pointed out, it was only up 6% over the 5-year average, but 25% of the new listings is actually properties being relisted for sale that failed to sell. If you were to remove those, that would actually push new listings down to 13% below the 5-year average. So the big jump we saw in active inventory has less to do with the number of homes being put up for sale and more to do with fewer buyers actually buying properties. And there was a substantial jump in active inventory. We went from the previous month, where it was actually below the 5-year average, to being up 30% in just one single month. Now, there's a lot of doom and gloom going on in the Toronto real estate market sphere, and some of it is absolutely warranted. The numbers don't lie. Sales are way down and inventory is up. But let's dive a little bit deeper into things, because as you know, I like tracking trends, and I've been tracking price month over month changes. And actually we saw for the first time, again, 1 month doesn't make a trend, but we had seen 2 months in a row where price decreases had been getting bigger. And we saw now 1 month where it got a little bit smaller. We're gonna have to keep an eye on this and see what happens in the following months. Another interesting stat that I like to follow is sales price to listing price. Across the GTA, it was exactly 100%, which really doesn't jive with this whole idea of how bad the Toronto real estate market is, but prices are dropping. So what's going on here? Well, essentially what it means is that the day that the offer was made, the seller got essentially what they were asking. What it doesn't mean though, is that the sellers didn't drop the price potentially multiple times before they got an offer. But let's dive even a little bit deeper in the stats. So again, across Toronto, 100% sales to list price. But for detached homes, it was exactly 100% as well. Semi-detached actually saw sales to list price of 104%, meaning sellers were getting more than asking price. And townhouses was 103%, but it's condos. That's the big one. Apartment style condos saw only 99% of asking price. And that is where that glut of inventory is right now, especially in pre-construction assignment type sales. Those are coming up for sale like crazy in Toronto, and that's where they're seeing some of the biggest price declines. Okay, and here's even another really interesting stat, and it's talking about average price. And as you guys know, I don't like using average price, and it was really interesting. A lot of guys that have been tracking average price, seeing it trend down, we're talking a lot about it. And then last month, it jumped up, and all of a sudden, nobody was talking about average price anymore all of a sudden. Again, part of that is composition of sales, and that's why I don't like using average price. When you see a weird composition of sales, that's part of what we saw here. That is going to skew that average price. But also what's really interesting is that in the last 20 years, from August to September, not one single time in those 20 years have prices dropped from August to September. Even last year, we saw a 0.7% increase in the August-September average price. This year, it was 3.4%. So why is it then that average price increased 3.4% in 1 month? There's all of a sudden a strong market in Toronto, No, it's not. We're still seeing prices decline, and I expect we're going to continue to see prices decline in Toronto. But a part of that is that from July to August, prices dropped close to 8%, kind of overshooting probably where you'd expect prices to drop. So really this past month was more of a rebalancing of what should have happened from the previous month. In Ottawa, they had 1,100 homes sold the month. That is down 31%. Versus the 5-year average of almost 1,600. While the 2,600 homes that were newly listed for sale is up 9% versus that 5-year average, where typically about 2,400 homes are put for sale in the month. And when it comes to active listings, there's almost 3,800 homes for sale right now in Ottawa. That's up 35% versus the 5-year average, where typically about 2,800 homes would be up for sale this time of year. So months of inventory in Ottawa is 3.4, just edging into a balanced market. When it comes to home prices in Ottawa, the Canadian Real Estate Association's composite benchmark price, which is less volatile to swings than average price is, and it combines all property types into one easy to use number. It's just shy of $650,000. That is up 1% year over year, but it is an 11% decline from the peak we saw in the spring of 2022, which was about $725,000. When I've been talking with real estate agents in Ottawa, they're telling me it's really slow, and yeah, that doesn't surprise me at all. Look at the numbers. Things are way down from where you would expect. When it comes to active inventory, the Ottawa real estate market has been so low in active inventory for quite a long period of time that even though we are up over the 5-year average, the number of active listings today would actually be down, or is actually down, 20% from the 10-year average. That just shows how low inventory in Ottawa has been for the last few years. In Montreal, they had 2,700 homes sold in a month. That is down 25% from the 5-year average, where typically about 3,600 homes sell. And the almost 5,900 homes that were newly listed for sale is still down 5% from their 5-year average, where typically about 6,150 homes are newly listed for sale in the month. But when it comes to active inventory, the 16,400 homes currently for sale is up 3% from the 5-year average. Usually about 15,980 homes are for sale this time of year, and that means months of inventory is 6.0. So Montreal is the first real estate market in Canada to officially touch that buyer's market category. When it comes to home prices in Montreal, the Canadian Real Estate Association's composite benchmark price that combines all property types into one simple, easy to use number, and it's less volatile than the swings you can see in average price. That's why I like to use it. $518,000, that is up 2% year over year. It's down 5% from the peak we saw in the spring of last year, was about $550,000, but it's also 2 months in a row now that home prices have dropped month over month in Montreal. When I'm talking to real estate agents in Montreal, they're telling me a couple things. First off is that the month actually started off relatively busy and then slowed down in the back half of the month. And this is most evident in condos. That's where they're seeing more inventory pile up and fewer sales, which is interesting because in other cities, we're seeing the flip. Now, they're also telling me that a lot of buyers, or I should say a lot, but some buyers are throwing out lowball offers to kind of see what sticks and see if they can find a desperate seller. I don't blame them right now. With how much inventory there is in Montreal, I'd probably consider doing the same thing as well. What is also interesting is that those that own multifamily buildings, some of them have been putting them up for sale and just kind of sitting to wait and see what kind of price they can get. And that's what's been pushing up active inventory in that property category. Now, they're not super motivated to sell, they're just kind of fishing. In Halifax, I don't quite have a 5-year picture, so I got to compare year over year. Not a perfect thing, but that's what I've got. 361 homes were sold in a month. That is up 4% year over year. While the almost 530 homes that were newly listed for sale in the month is up 4% as well. And the 900 homes that are currently for sale in Halifax, that is up 7% versus last year, and that pushes months of inventory into 2.5 in Halifax. When it comes to home prices in Halifax, they don't have the Canadian Real Estate Association's composite benchmark price there. They just don't calculate, so I've got to use average price. I don't like it, but it is what it is. $564,000. That is up 9% year over year, but 2 months in a row, the average price has dropped in Halifax. So 2 months in a row, home prices drop in Halifax. Months of inventory, 2.5. Inventory in general, starting to add up. Is the Halifax market finally cooling off? The foreign buyers all forgot about Halifax and decided to buy houses in Calgary? Well, actually, there's some truth to that right now. Part of what's driving down average price, though, is composition of sales. And that's why I don't like using average price, because especially in a small sample size like Halifax, where they don't have a ton of sales, composition of sales can really skew that average price. And if you've been following this channel for a while, you've seen how much prices can swing month over month in Calgary, or sorry, Halifax. I'm thinking too much about Calgary. what we're seeing in Halifax right now, that sub $400,000 price point, that's selling pretty well. A lot of houses are selling, pretty good there. Multiple offers are still happening. Where over $600,000 price point, that's where they're seeing a pretty slow market, not a lot of activity right now. And that's what's been pushing down average price, because that $400,000 price point, that's selling a lot more, and that's making up a majority of the sales. Now, what's also been really interesting with talking with agents there, and if you follow me on Instagram, I post the weekly stats in Halifax. I've got a great set of agents that send me all that data, and you're seeing that generally about 50% of houses in Halifax are selling over asking. So what the heck's going on there? Well, definitely, again, that sub $400,000 price point is where they're seeing a lot of activity, but also what's happening is sellers will put the house up for sale, they'll reduce it a couple of times, and all of a sudden, boom, that price drop triggers a bunch of buyers, and now all of a sudden you get a couple offers on it and it sells over asking again. That's a recap on the month here, but if you want to check out what's going on each and every single week, I do a weekly news recap here. I'll put a link to that, and that's that video right there. If you love this video, please give this video a like, subscribe to Bald Prairie Real Estate to keep up to date on the Canadian real estate market. Leave some comments below so we can chat in the comment section. And as always, thanks very much for watching.